The stock market is highly volatile, and this has been evident in the upward and downward trends of Tesla's stock price. However, there are factors that can cause Tesla's stock price to go high despite the numerous challenges of the stock market. And Wedbush analyst Dan Ives has said that these catalysts can cause Tesla stock to be tripled by the end of 2023. Hey guys, welcome back to Tesla Tomorrow. Dan Ives had previously said that Tesla stock could rally 35% this year since its recent price cuts have already been a huge success in China. Tesla cut the prices in China twice as the company continues to face sluggish demand. Wedbush surveyed over 500 consumers in China who were expecting to buy an electric vehicle this year, and found that 76% of those surveyed said that they were considering buying a Tesla, beating local competition like BYD and NIO. Also, nearly 70% of those surveyed said they'd been positively influenced to purchase a Tesla due to the recent price cuts. Wedbush survey had also concluded shortly after prices were slashed for Tesla's Model 3 SUV and Model Y in Europe and the US. According to Dan Ives, Tesla's recent price cut is a huge success story so far. He added that China represents the core of the Tesla global growth story, and appears the price cuts have been well received by EV consumers and thus accelerated purchasing decisions. Ives reiterated his 12-month price cut targets of $175 for Tesla stock, which implies a rally of 35% from current levels. The stock analysis had said that Tesla's price cuts were a sign of the company getting more aggressive as competition heats up in electric vehicles. Likewise, in December, Dan Ives said that the steep slide in Tesla's stock price in 2022 was starting to catch the eye of valuation watchers, adding that not since 2018 has Tesla traded at these levels. The Wedbush analysis stated that on an EV/EBITDA basis, Tesla's stock price at the time was its cheapest valuation to date. So what factors will cause Tesla's stock to increase threefold according to Dan Ives? Let's find out. But before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date with everything going on with Tesla. The first catalyst stated by Ives was the global EV sales, which continues to soar amidst January tax credit by the Inflation Reduction Act. The IRA of 2022 is the most ambitious climate legislation in US history and aims to make electric vehicles a little more attainable, or at least that's the hope in the long run. The bill, signed into law by President Biden on August 16th, has allocated over $369 million for climate action, with a portion of the budget dedicated to enhancing tax credits for the electric vehicle purchasers. For a car to be eligible for the credit, batteries in the car must meet a minimum threshold of parts sourced from the US or countries with which it has a fair trade agreement. While the requirement for the tax credit may keep several companies from benefiting from this privilege, several investors believe that Tesla was definitely on the list of car companies to qualify for this tax credit. However, while this did take place, not all Tesla cars qualified for the tax credit. According to the IRS, since there's an applicable MSRP limit of $55,000 for electric cars and $80,000 MSRP limit for electric SUVs, trucks, and vans, the Tesla Model S, in particular the sedan version and Model X SUV, were not eligible for the $7,500 tax credit. This is because the Model A starts at around $105,000 and the Model X is priced from approximately $121,000. It appeared that the IRS only considers the Model Y an SUV even if it has 7 seats, since the 5-seat Model Y long range starts at just under $66,000 and the 5-seat Model Y Performance is priced from just under $70,000, making these variants ineligible for the tax credit at the moment. The Tesla Model 3 Performance was also not eligible because it starts at $62,990 and goes above the $55,000 threshold. However, the Tesla 5-seat Model Y has now been made eligible for the tax credit, and it is believed that this will positively affect demand. It is important to note that while the previous announcement of the tax credit had allegedly affected demand, the fact that some of Tesla cars missed out on the tax credit does not translate to a future decline in the demand for these cars. Whether Tesla's EVs get the tax credit or not, the car company is still in a good position to record enormous demand in the coming years. For instance, if Tesla keeps prices the same, the demand for its cars will inevitably grow, especially as the car company continues to improve on its EVs. And if the car company chooses to increase prices over the coming years, while demand may not be as high, its profit margin is still sure to increase in the coming years. The Gigafactory ramp is also another catalyst identified by Dan Ives, as Tesla plans to announce new Gigafactories in the next few years. At Tesla's annual stockholders meeting, Musk said he thinks Tesla could eventually build as many as 10-12 Gigafactories globally. The CEO also mentioned that Tesla could produce up to 20 million electric cars per year by 2030, with each factory outputting between 1.5 and 2 million units per year. Currently, Tesla has gigafactories in Fremont, California, Sparks, Nevada, Buffalo, New York, Austin, Texas, and others outside the US, in China and Germany. To achieve 10 minus 12 gigafactories, Tesla would need to build at least 3 to 5 new gigafactories, in addition to the one Musk says the automaker could announce this year. And with the automation of these gigafactories, production may hit record-breaking levels. The easing of concerns around Musk's deal with Twitter is also another aid for Tesla's growth. In a recent note by Dan Ives, he wrote that the second biggest request on his Christmas wish list was for Musk to find a successor to run the social media company. According to him, with the recent Twitter chaos, which has resulted in a major headache and overhang for Tesla, he believes that Musk needs to name a permanent CEO of Twitter to end the pain. Many Tesla bulls feared that Musk was spending too much time and money on Twitter, and since Tesla is yet to achieve its goal of full self-driving, it may be even difficult to achieve it with Musk's divided attention. Although Tesla has successfully met with the delivery of its expected Sydney truck, other vehicles such as the Cybertruck and Robotaxi are still yet to hit the market, and this will demand Elon Musk's commitment and presence. However, since Musk is already looking for someone to replace him as Twitter's CEO, the fears and concerns have eased off. The Cybertruck has also given investors something new to talk about in terms of its profitability and how much Tesla can grow with this new technology. Another one of Dan Ives' catalysts for Tesla is lowering of interest rate hike. There is a possibility that the Fed will be pausing interest rate hikes as inflation seems to be calming. Market expectations are running high that policymakers will likely approve another rate hike, but this time opting for a 0.5 percentage points or 50 basis point move. In September, the Fed raised its benchmark interest rate by 0.75 percentage points, which was the third of such outsized rate increase in a row, bringing the Fed rate to 3% to 3.25%. This hike in interest rate had significantly affected stock price and raised fears about what the future holds. But now, the fears seem to be easing as the Fed has admitted to lower inflation rates. Federal Reserve Vice Chair Lael Brainard also said that she was encouraged by the recent U.S. inflation report, which pointed to slower price increases and said the Fed would likely soon reduce the size of its interest rate hikes. Federal Reserve Governor Christopher Waller recently said that he is open to reducing the level of interest rate increases soon, so long as the economic data cooperates. According to him, the data of the past few weeks have made him more comfortable and prompts him to consider stepping down to a 50 basis point hike. And finally, the long-awaited Cybertruck. Dan Ives, as well as other Tesla bulls like Garrett Nelson, believes that this will be huge for Tesla. The Cybertruck saga is finally coming to an end after years of delays, and luckily without major redesigns, the electric truck is getting ready for production. This fact alone seems to have spurred more fresh orders, and people who ordered it years ago are not giving up their turns. The Cybertruck recently counted over 1.5 million orders. This means that Tesla made $1.5 billion before even selling a single Cybertruck. Although all the orders are non-binding and fully refundable, the majority of people want to go through with the order. There is no other vehicle in history of automotive industries that has gathered so much interest, with people willing to put down their money without actually knowing when they're going to get their car. Hopefully, if all goes well with Tesla's plans for the Cybertruck, customers can finally get their chance to drive their own Cybertruck, especially those who ordered early on. According to Garrett Nelson, the best thing that Musk can do is to be focused on more than just Tesla, and in getting the Cybertruck to market as soon as possible. He reiterated that the forthcoming model has the highest backlog of any forthcoming EV in the market by a wide margin, and so the sooner Tesla can bring the new car to market, the better. He believes that when people actually see the vehicle on the road, it's going to generate a whole lot more demand and more interest. Do you think that these catalysts can spur Tesla's growth in the coming months? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.